Good afternoon, everyone, and welcome to the Monday Open, hosted by the Vantage Private Client team. My name is Ollie, and joining me today is Tony. How you doing, Tony?
Good. How about you?
I'm doing very well, thank you, mate. So going over the structure for today's video, we'll start off by covering the events from last week, so focusing on the major market-moving events and the announcements, and dissecting the price movements as a result. We'll then switch over to the week ahead, where we'll focus on the upcoming major events of the week and give our take on how we expect prices to react to said announcements. Following on from there, we'll shift into the technical corner, where we'll put a spotlight on a couple markets and speculate a potential price movement using our technical indicators through a top-down analysis. Lastly, we'll move into our Q&A section, where Tony and I will answer some of the most commonly asked questions that we get from our clients. So without further ado, Tony, would you like to take it away with last week?
Yeah, sure, not a problem. So we begin with the breaking news. Now, Trump threatens EU's on the trade deal. President Donald Trump threatens to snap European imports with a sweeping 50% of tariff, citing on his Truth Social platform on Friday that the trade talks with regional leaders are going nowhere. He's also stating that his willingness to impose 25% tariff on iPhones made outside of the United States. Now, it's worth noting that this is not the policy implemented by his social post. However, the market had immediately reaction out of this. Now, in the United States, we're seeing SP 500 close down 0.7%, Nasdaq down 0.93%, while Dow Jones down 0.61% on the day. Whereas in Europe, German DAX went down by 1.54%, while French CAC 40 down 1.65%. Now, according to the most recent report from BBC, Trump has agreed to extend the deadline to the negotiation tariff with Europe until 9th of July. Whether or not the EU leaders will change the tactics in response, traders might need to keep a close eye on it. Now, speaking of Europe, on Monday, we had Europe final CPI year-on-year came out. The actual number was 2.2%, absolutely in line with previous numbers and forecasted numbers. As a result, market generally react positively towards the news, as was expected. For the currency market, for example, we have Europe to US dollars up 0.71% at 1.12428, whereas German DAX going up 0.7%. We're looking French CAC 40 down slightly, 0.039%. Now, UK, on the other hand, we're looking at a very different picture here. So, UK CPI year-on-year went up to 3.5%. Now, this is higher than the previous 2.6%, as well as a forecast of 3.3%. Now, hitting the highest inflation rate since January 2024, we're seeing that it was driven mainly by high energy, water bills, road taxes, and airfares. Now, what does that mean for the traders then? Well, interest rate outlook becomes a dim, that's for one. The likelihood of imminent rate cut by the Bank of England is now diminished. As a result, we're looking at a pound to US dollars boosted 0.19% to 1.34188 on the day. We're also looking at FTSE 100 close 8,724 points, down 0.65%. Now, back to home, here in Australia on Tuesday, we have RBA rate decision, which, no surprise at all, the central bank cut 25 points to 3.85% from the previous 4.1% numbers there. Now, there was a completely within the market expectation. Now, speaking of which, Ollie, why don't you give us some price reaction on the news?
Thanks, Tony. So the RBA has been quite vocal about a number of rate cuts in 2025. So the reaction on the Aussie dollar, I would say, is somewhat quite subdued, with the markets largely having priced in the rate cut already before the announcement. So the Aussie was down 0.52% against the dollar on Tuesday following the announcement initially, which was expected, but the Aussie did recover quite quickly to close the week up 1.42% against the dollar. So the larger moves for the Aussie was actually seen against the pound, with the pound up 0.48% against the Aussie last week. although there is a bit of an argument to be made as to whether or not that was down to pound strength as opposed to Aussie weakness coming from the rate cut. But I guess this kind of leads nicely into the UK-EU trade deal from last week, Tony, if you wanted to jump into that one.
Thank you very much for that. Okay, so let's pick up with the deal here. Now, according to the BBC and the Financial Times, that the deal includes the following main areas. We're talking about East trade in food and agriculture, fishing access and the market exchange. We're talking about defense and security cooperations, travel and mobility enhancement, and last but not least, a steel quota agreement. Now, what does that mean for the traders? We believe that certain sectors in the equity market might be worth watching out as they are clearly benefit for the deals that's being implemented there. Again, we're looking at food agriculture sector, seafood and fisheries, defense and aerospace, hospitality and tourism, and we're also looking at energy and utility sectors. So in saying that, Ollie, what did you see on the market sentiment, on the reactions?
Well, mate, I'd say there's a few markets that I'm going to be following quite closely off the back of that trade deal. So the first one is the defense industries, more specifically manufacturing equities. So the partnership itself does give the UK firms access to the EU's £150 billion defence fund, with the UK officials estimating the overall deal will be worth about £9 billion a year to the UK economy by 2040. I'll also be focusing on trying to look for some euro and pound strength. So essentially, the increase in spending in the economy should drive up GDP and grow the currency strength as a result. Conversely, part of the deal also allows EU fishing vessels access to UK waters. So a move which has been heavily criticised by the UK's right-wing leaders. So a short on UK fishing equities could also bring in some opportunities. But how about you, Tony? Is there any industries you're looking at in particular?
Well, I think actual defense is definitely my picks as well, given the fact that Donald Trump has been criticizing Europe for lack of effort defending themselves. And we have already seen in the past that the European Council has actually passed the laws on increasing defense industry and all the kind of a spending there. So indeed, that is something in there. I also actually wanted to look at the tourism industry as well. Ever since Brexit, clearly we're looking at there is a blockage of movement, which this deal is looking to undo some of the damages there. Right, so that's pretty much wrap up the last week. Now, moving to this week, we got a few things to look out for. First thing first, Monday today is UK and US public holiday, so don't be surprised that it's a bit quiet in there. But moving forward, on Tuesday, we have Bank of Japan core CPI year on year will be announced. Now, looking at the historical data here, we're looking at previous end up 2.2%, and the market is forecasting at 2.3%. Now, given the impact of CPI results could have on the BOJ rate decision, traders who trade in Japanese equity market as well as Japanese yen might need to pay attention on the upside or downside surprises when the data was released. Now, speaking of which, Wednesday in New Zealand, we have New Zealand official cash rate announcement. Previously, we're looking at 3.5%. Similar to Australia here, the market is a forecast 25 points rate cut to 3.25%. Again, after RBA's rate cut decision, traders should who focus on AUD New Zealand dollar trade might want to focus on this particular piece of news. Pay attention again on the upside and downside of surprise there. Now, back home here on Wednesday, we have Aussie CPI year on year to be announced. Now, previously, we're looking at 2.4%. Market is expecting to come down to 2.3%. So, Ollie, what's your take on this?
Well, it's an interesting one with the Aussie CPI. So the forecast is expecting a 2.3% print, down from the 2.4% last year, which would suggest easing inflationary pressures in the Australian economy, which would in turn strengthen the Aussie dollar. However, I'm looking at the CPI data release with the real value of that being indication of future RBA rate cuts. So as we touched on earlier, the RBA has not really been too secretive about the fact there are going to be a number of rate cuts this year. So in short, a lower CPI reading compared to the previous would suggest the easing inflationary pressures, which could in turn prompt the RBA to cut rates in its effort to stimulate the economy. So from my view, the fact that Governor Bullock has confirmed a 50 basis point cut was discussed has sent a clear message to all of us that the RBA is open to front loading its easing cycle. So a lower than expected CPI reading could push for a rate cut in the next meeting. So I'll be looking to short the Aussie if the CPI comes out softer than expected, as I'd anticipate markets to start pricing in the next rate cut. Personally, I'm forecasting 2 more rate cuts this year, including one next month. But how about yourself, Tony?
Well, I don't disagree, 3 rate cuts in total, but look, I'm more certain on the next one rather than the third one because, look, we're in good position, first of all, when it comes down to recent CPI numbers, but the uncertainty between US and China trade negotiations will still have an impact on Aussie economy, given, well, China is one of our biggest trading partners. So for the third card, it really depends on how everything plays out. And we are still need to keep a closer eye on that to see how it comes out. All right, so that moves to the next thing we need to focus on this week. That is OPEC Plus meeting. Now, for those who do not know what OPEC Plus is, OPEC is a group of 13 major oil producers, mainly from the Middle East and Africa, plus other oil producers in the market, such as Russia. Now, on regular basis, the group comes together to determine the items such as, well, let's say oil price stability and oil production targets. As a result, current oil production cut would be likely to be included in this meeting. One thing worth mentioning, though, is that last week, crude oil inventory came out as 1.3 million barrels, compared with expected, supposed to be a minus 0.9 million barrels there. So what does that really mean for the traders? What we're essentially talking about here. So we already actually discussed this last week when it comes down to OPEC Plus meeting, regarding oil supply could have impact on oil price. Then oil price would have a further impact on the inflation. Inflation in turns will impact central bank rate decision, and then this could be translated into impact on the forex market and equity market. As such, this is something traders definitely wants to watch out. So that's pretty much from me. Ollie, why don't we just start a bit technical side to look at what's going on in the market?
Too easy, mate. Let's roll into the technical sections. I'll share my screen with everyone.
Yep.
I'm aware it's going on a little bit long, so we'll try and roll through these ones pretty quickly. So the first market I wanted to put some light on today is the US dollar against the yen. So I've highlighted the 140 price point as a historically significant support price. So it first acted as support price around here towards January 2024, for it was rising up to the 162. So since then, we've seen a downward trending resistance level shown by the green line just above the prices here. So it's fallen from the 162 down to 140 before jumping up again to 159 to test the 140. So most recently, resistance was found around the 148.6 price point, with a drop coming significantly quicker than previous. So based on the weekly, I am seeing a downward trending market. This is also supported if we shift over into the daily chart for the dollar against the yen. So the price is sitting well below our moving averages. This is for the 50 hour, the 100 hour, and the 200 hour. So all the moving averages are evenly spaced, heading it down into the same direction, which should support the sentiment for a downward trending market. Also, as well, if we look down to the MACD line here, we can see the MACD line highlighted in the blue has crossed down below the signal, which would indicate bearish momentum. So if we go into the shorter time frame on the 4 hourly, the price is continuing to test the lower band on our Bollinger Bands. So in terms of a trade here, I'm going to be looking to sell at the current market price with a price target set around the 140. I'm expecting it to test that 140 again. And I'd be placing a stop at the 20-hour moving average mark shown on our Bollinger Bands, which is currently sitting just shy of the 143.34. So the next market I wanted to put some light on was the US dollar against the Swiss franc. So for anyone who would know, we're basically focusing on the two safe haven currencies today. So I'm seeing a historically range-bound market dating back to March 2023. So a break of this trend was shown just around here. This was around the start of April this year to find a new support at the 0.805 mark or just around. So this raised to the previous support price at 0.84, although it failed to hold and close below, signaling a downward trending market. This is also supported if we shift over into our daily chart here. So similar to the last market we had, we're seeing the price is currently sitting below our 3 moving averages. Sitting below 3 moving averages. They're evenly spaced heading down into the same direction, which would indicate a downward trending market. It's also supported just here by the MACD line. So the MACD line in the blue is about to cross over with the signal line, which generally does indicate a change in momentum shifting towards bearish. As well, if we shift this into our 4-hour chart now, so in terms of the pricing action on the 4-hourly, we can see it is currently testing the lower band of our Bollinger Bands, which would signal a continuation of the downward trend. So in terms of a trade on here, I'd be looking to get into a sell market at the current market price. I'd be setting my price target or my limit at the recent swing low shown just before on the Monday last week, which is about the 0.804 mark. And I'll be setting my stop at Friday's high, which would be about 0.3, which is just around here on the moving average. Okay, so that brings us to the end for our technical section just here. So we'll shift in now to the Q&A section. So in this section, we like to take some of the most commonly asked questions sent to us by our clients and open them up to a wider forum. So Tony, would you like to take it away with question 1?
Yeah, sure, not a problem. Some of my clients has asked me about what are the risks they really need to watch out when trading in Forex. So there are a few of them to look at. First of all, we're looking at market volatility. This is a type of a risk of losing money due to unpredicted changes in the currency prices. There's also actually, particular for CFD traders, high level leverage losses. So the leverage magnify both the profit and losses. And also we're essentially looking at event related risks that traders need to watch out. This means that unexpected new events can cause extreme volatility, i.e. Donald Trump actually Twitter again. So the other thing here is that people need to watch out is the broker risk. So you might be trading with an unregulated, financial unstable broker, causing actually issues such as lose access to your funds or unable to withdraw. As such, risk management is essential when you're trading Forex. We're talking about using stop loss orders. We're talking about managing your position size and also trade with a discipline. Of course, the other thing is to be sure that you trade with a regulated broker. That's pretty much from me. Ollie, you wanted to take the second one?
Thank you, Tony. So question 2 is, why does liquidity matter? Long story short, it matters because it allows traders to get in and out of their trades quickly at the price you want. When we find liquidity is low, there are less prices which traders can trade at, so we can tend to lead to wider spreads and higher costs. On the other side of that, a liquid market gives better price stability, which in turn lets you execute your trading strategy the way you want. Okay, so this brings us to the end of the video today. The recording for this live stream will be up on our YouTube channel as well as in our VIP chat room later today. If you haven't visited our VIP chat room yet, please do. We post a lot of market content in there each day, along with our weekly technical video. We also have an overnight market summary, which is posted in there each day, which can also be accessed via email for anyone who'd like to sign up to the newsletter. If you'd like to be added to the newsletter, please feel free to reach out to us in the VIP chat room or by email. So that's all from me. I'll catch you later, Tony.
Thank you for having me. See you later.
Cheers.
Thanks.